Are you there either, Craig? Are you there, Craig?
Yeah, I was there hearing your Cuba comment. I love it.
Okay, great. So let's see how we go with this one. We got a big fat idea. Let's kick off with that one. What is it for us?
Okay, well, every time we want to give advice to your listeners and your subscribers, Michael, is that you always got to look at management, track record, and trends. And we've been following this opportunity since, 2014. This company's been giving double-digit returns for their investors each year. And you know what I'm talking about? I'm talking about car wash operating business in the United States, focusing on the U.S. Sun Belt. And I tell you, the one thing the Americans love more than cars are clean cars.
You know, what's interesting about this low-yield environment is that people, and this is why I'm sure, companies like yours at TriView do a lot of private sector investing, not stocks, publicly traded, private equity kind of deals, is that it's really forced them to look at a whole bunch of different industries, because the payoff out of those industries is much higher. Even with the rise in bond yields, we're still not talking much at this point. So that's what's so fascinating about this. Give me just a couple of details about the car wash business.
Well, a couple of things. First of all, there's low operating costs, especially in the United States. Canada's a little different. It's not as easy to make money in Canada versus the U.S., but they have low operating costs. Generally, their cost is less than $1, but their margins are great because they charge anywhere between $3 to $7 per wash. Here's the one thing that people don't understand is that it's actually good for the environment. Car washes use 70% less water on washing your car. Now, I can tell you, as a former alderman for the city of Calgary, you're not allowed to wash your car in your driveway because we don't want the soap and salt and grime going into the stormwater. So in one way, it does protect your environment. But here's the other thing that we look at as business people. It's a $9 billion industry. It has 100,000 locations across the U.S. That's how many they are. But yet the largest operator only has 200 locations. So the company that we're working with, the group's called ClearSky, they've washed over 2 million cars so far just this year alone. So obviously they have experience washing cars. They have 27 locations, and their goal is to get to 100 locations by end of next year. So a huge opportunity to grow. That's why we can get the double digit with cash growth. But more importantly, the exit. How do you get out? Well, you build something big enough, somebody wants to buy it from you.
Yeah, both those points are very big, though. Let me come back to one, then I'm going to ask you about the exit side. But on the first one, what kind of rate of return? You're not talking guarantee, but I want to know just kind of what ballpark you'd expect in terms of sort of an annual yield.
So from our auditing side, we're looking at the company makes anywhere between 16 to 18% cash per month. And the returns they're giving to the investors is 10%. It's targeted. Obviously, if things go wrong, you may not get 10%. But here's what we did. Here's what we do for our investors. We put a clause in for the guys who actually manage it, the manager of the operation. They get 2% a year. If they don't get our clients at 10% a year, let's say it's 9.9, they don't get their 2% operating admin cost. So they're incentivized to make sure that the client gets their 10%. So it's a quarterly return. It's 2.5% a quarter, and it's 10% a month, a year. Sorry.
But, let's go back for a second here. You mentioned the exit. That's a great point, because a lot of times obviously in the stock market, your exit is put a sell order in. In the private equity market, that's a great question to be asking. What's the exit point here? And I'm glad you just brought that to our attention. So in this case, what's the hold? What's the exit?
Well, so realistically, on opportunities like this, I always say to people, it's always 3 to 5 years. Okay, private money. Remember, a person who owns a company needs time to put that money to work to get the returns you're looking for. But what's great about the car wash, they're already operating day one. We're not building them. We have them. They're making money right off the bat. The exit is this. It's very much like Loblaws. You've seen all these big, huge companies. If you build up a couple of hundred locations, now I have two things. I have a piece of real estate that now what I do is I lease back the business back. So now I have a cap rate, I have a value on the real estate. But then the company generates money by its EBITDA. So that creates a very attractive opportunity for a pension fund that wants to come in and find a long-term, stable product that provide double-digit returns. And that's why we think when we get to a certain size, a pension fund is going to pay. They don't buy something for $5 million. They're looking at $50, $100 million or more. So that's the goal. We have to get to a certain size so a big guy writes a check. There could be an IPO, but I think in this world, more and more companies, they don't want to do IPOs anymore. They're just simply, there's so much cash out there in family offices and sovereign wealth funds. There's lots of opportunities to sell to big investors that are privately held.
Interesting stuff as always, Craig. I really appreciate you taking the time with us.
Yeah, and just for your clients, if you want to learn more in more detail, if they go to our website at triviewcapital.com, they can see the 8 ways, 8% that we're working with Money Talk listeners and subscribers. And again, looking forward to seeing you at the World Outlook Conference there.